To solve this question, we need to identify which of the given investment options are considered alternative investment funds (AIFs). Option A. Bonds. Bonds are traditional debt instruments. They are not typically classified as alternative investment funds. Option B. Hedge funds. Hedge funds are indeed a type of alternative investment fund. They employ a variety of complex investment strategies and often cater to sophisticated investors. Option C. Stocks. Stocks equities are traditional equity instruments representing ownership in a company. They are not classified as alternative investment funds. Option D. Venture capital. Venture capital is a form of private equity financing that is provided by venture capital firms or funds to startups, early stage, and emerging companies that have been deemed to have high growth potential or which have demonstrated high growth. Venture capital funds are a prominent type of alternative investment fund. Therefore, out of the four options, hedge funds and venture capital are treated as alternative investment funds. So option B is the correct answer. Here's an analysis of the options provided regarding the sources of income for the Reserve Bank of India (RBI). Option 1. Buying and selling government bonds. The RBI engages in open market operations (OMOS), which involve buying and selling government securities, bonds. When the RBI sells bonds, it absorbs liquidity from the market. When it buys bonds, it injects liquidity. The interest earned on these government securities is a significant source of income for the RBI. This is a source of income. Option 2. Buying and selling foreign currency. The RBI manages India's foreign exchange reserves. It buys and sells foreign currency to stabilize the rupee and manage exchange rates. Profits from these foreign exchange operations, including interest earned on foreign currency assets, contribute to its income. This is a source of income. Option 3. Pension fund management. The RBI is the central bank and its primary functions are monetary policy, currency issuance, and banking regulation. While it might manage its own employees' pension funds, it is not a general pension fund manager for the public or other entities in a way that generates significant external income for the institution itself as a core function. This is generally not a direct source of significant external income for the RBI. Option 4. Lending to private companies. The RBI is a bankers' bank and government's bank. It primarily lends to commercial banks through repo and reverse repo operations and to the government. It does not directly lend to private companies for commercial purposes. This is not a source of income. Option 5. Printing and distributing currency notes. While the RBI is responsible for printing and distributing currency notes, the act of printing itself incurs costs, and the face value of the currency is a liability, not an income. The profit from currency issuance seigniorage arises from the difference between the face value of the currency and the cost of producing it, but this is a unique concept related to monetary sovereignty rather than a conventional income stream in the sense of earning revenue from a service or asset. However, in the context of sources of income, for a central bank, the seigniorage is often considered an implicit revenue. This can be considered a source of income in the broader sense of a central bank's financial operations. Revisiting the options based on the above analysis. Given the options, and considering that seigniorage from printing and distributing currency is a recognized financial aspect of central banking, option D seems the most comprehensive and accurate among the choices provided for the income sources. Therefore, the correct answer is D. Here's an analysis of each row. Row 1. Directorate of Enforcement. Some of its functions, enforcement of the Fugitive Economic Offenders Act, 2018. This is correct. The ED is responsible for enforcing this act. It works under Internal Security Division 1, Ministry of Home Affairs. This is incorrect. The Directorate of Enforcement works under the Department of Revenue, Ministry of Finance. Row 2. Directorate of Revenue Intelligence. Some of its functions, enforces the provisions of the Customs Act, 1962. This is correct. Directorate of Revenue Intelligence is the chief intelligence and enforcement agency for anti-smuggling matters under the Customs Act. It works under Department of Revenue, Ministry of Finance. This is correct. Directorate of Revenue Intelligence is a part of the Department of Revenue. Row 3. Directorate General of Systems and Data Management. Some of its functions, carrying out big data analytics to assist tax officers for better policy and nabbing tax evaders. This is correct. This directorate is indeed involved in using data analytics for tax administration. It works under Department of Revenue, Ministry of Finance. This is correct. This directorate operates under the Central Board of Indirect Taxes and Customs, CBIC, which is part of the Department of Revenue. Summary of correctness. Row 1, incorrect parent ministry. Row 2, correct. Row 3, correct. Therefore, 2 rows are correctly matched. The final answer is B. Here's an analysis of the statements. Statement 1. The Reserve Bank of India mandates all the listed companies in India to submit a Business Responsibility and Sustainability Report, BRSR. The Business Responsibility and Sustainability Report, BRSR, is mandated by the Securities and Exchange Board of India, SEBI, not the Reserve Bank of India, RBI. SEBI introduced the BRSR framework for the top 1,000 listed entities in India by market capitalization. Therefore, Statement 1 is incorrect. Statement 2. In India, a company submitting a BRSR makes disclosures in the report that are largely non-financial in nature. The BRSR framework focuses on environmental, social, and governance (ESG) aspects of a company's operations. These disclosures include quantifiable metrics and qualitative information related to areas like environmental protection, human rights, employee well-being, responsible public policy engagement, and sustainable goods and services. While the report is integrated with the annual financial report, the information within the BRSR itself is predominantly non-financial, focusing on the company's sustainability and social responsibility performance. Therefore, Statement 2 is correct. Based on the analysis, Statement 1 is incorrect. Statement 2 is correct. The correct option is only 2. The final answer is B. This is a multiple-choice question testing knowledge about Indian tax laws, specifically concerning agricultural income and assets. Let's analyze each statement. Statement 1. In India, income from allied agricultural activities like poultry farming and wool rearing in rural areas is exempted from any tax. Analysis. Under the Income Tax Act, 1961, income from agriculture is generally exempt from tax. However, the definition of agricultural income is specific. Income from allied activities like poultry farming and wool rearing, while related to agriculture, are often not considered pure agricultural income and may be taxable under the head, profits and gains of business or profession, unless specifically exempted or falling within the definition of agricultural income. The broad statement, exempted from any tax, makes it highly suspect, as certain allied activities, especially on a commercial scale, are indeed taxable. Statement 2. In India, rural agricultural land is not considered a capital asset under the provisions of the Income Tax Act, 1961. Analysis. This statement is generally correct. Section 2 subsection 14 of the Income Tax Act, 1961, defines capital asset. It specifically excludes agricultural land in a rural area. This means that the sale of rural agricultural land does not typically attract capital gains tax. Evaluating the options. Both Statement 1 and Statement 2 are correct and Statement 2 explains Statement 1. Option A. We've identified Statement 1 as likely incorrect. Also, Statement 2 about rural agricultural land not being a capital asset does not explain Statement 1 about income from allied agricultural activities. Option B. Both Statement 1 and Statement 2 are correct but Statement 2 does not explain Statement 1. Again, Statement 1 is likely incorrect. Option C. Statement 1 is correct but Statement 2 is not correct, Statement 1 is likely incorrect, and Statement 2 is correct. So this option is wrong. Option D. Statement 1 is not correct but Statement 2 is correct, based on our analysis. Statement 1. Income from allied agricultural activities being fully exempt is generally incorrect, and statement 2, rural agricultural land not being a capital asset, is correct. Therefore, option D seems to be the most accurate. Final answer. The final answer is D.